Hello and welcome to another session of the My Solo 401k Financial daily webinar series. If you have questions or topics you would like to discuss, please chat those over now so that we can be sure to get to them all. If you are finding this video to be helpful, please like this video, whether you're on YouTube or LinkedIn or X or Instagram, as that helps us to get the word out to other solopreneurs just like you, other advisors who might be looking to secure their retirement savings. Today's topic, 12 All right, thanks again. Let's start the good questions and turn it up. Our first question here is from Harry. My solo 401k.net client here. My plan has been upgraded to have the 3% automatic contribution feature to qualify for the $1,500 tax credit over 3 years. 2 questions. Do I need to make sure to remember contributing 3% of the salary with every salary payment? What happens if I forget to do it? How to opt out and if there's a fee? So for new clients, either those that are setting up a new plan, or even if you have an existing solo 401k that you're upgrading to our plan to take advantage of the service and features of our plan, let's say you got a solo 401k at Fidelity or Schwab, we automatically include the automatic enrollment feature that is needed to make your self-employed business eligible to claim, included as part of the fee, the $650 fee. So those tax credits are going to more than cover our fees for the first 7 years. And if you or by December 31st, 2025, whether you set a plan or upgrade an existing solo 401k, you lock in the ability to start claiming tax credits, $500 per year for 3 consecutive years when you file your 2025 tax return. Now, for existing solo 401k clients who set up a plan with us before 2024, you can upgrade your plan to include the automatic enrollment feature so that you will also be eligible to claim the credit. But that will require restating the documents. So we do charge a $300 fee to upgrade those existing documents to include the feature, the required notices, etc. Now, part of that auto enrollment feature will establish a default percentage of the right to opt out of the default, which will allow you to contribute in whichever schedule or amount you prefer, of course, subject to the deadline. The package that new and you pay the fee to upgrade your existing plan. So part of that packet that we're going to prepare is going to give you a deferral election form that you can use to opt out of that default contribution percentage. All right, so hopefully that makes sense, Harry. And it looks like Robert had a similar question. So therefore, just to be specific, if you opt out of the default, then you don't have to remember contributing 3% of the salary with every salary payment, because you'll opt out of the default. And then you'll be able to contribute in whichever amount or schedule you prefer. And again, so it's automatically included for new customers, whether you're creating a new solo 401k or upgrading a pre-existing basic plan like a vanilla plan from Fidelity or Schwab. But if you're a historical client who set up a plan with us before 2024, we charge a one-time fee of $300 to upgrade your plan to include the automatic enrollment feature. And you're exactly right, Andy. So you don't have to make that. You can opt out of the default 3% contribution percentage, and just because the solo 401k owner exercises their right to opt out doesn't mean that the business doesn't have the plan that includes the automatic enrollment feature. So therefore, you're going to be eligible to still claim the credits and then make contributions of whichever schedule or amount you prefer, subject to the limits of the deadlines. Hopefully that makes sense. Let's see. How is the audio now? I'm going to repeat that answer. So I'm going to say it again. Thank you so much for your patience with the audio. So as far as the tax credit, and thanks for confirming. So as far as the tax credit, you need to have a plan like the one offered by my solo 401k financial that includes an automatic enrollment feature. So for all new customers, whether you're setting up a new plan or upgrading a basic plan, we automatically include the feature and the notices that are needed for no additional charge. So it's covered as part of that $650 fee. And so for historical clients who set up a plan with us before 2024, we were the first provider to offer a plan that included the feature and the notices that are needed to make the business eligible for the tax credits. So we worked with the IRS and other industry stakeholders for almost a year before we rolled it out at the end of 2023. So if you signed up before 2024, you would need to upgrade your plan. So we charge a one-time fee of $300 to prepare the amendment, the restated documents, the notices, etc. So now you see other providers in the space, even just in the last couple weeks, that have started to, after 2 years, because we've had it for 2 years now, roll out their plan that is eligible for the tax credits, which is great because it gets the word out. It makes access to these solo 401k plans more affordable. For example, these $1,500 in tax credits are going to more than cover our fees for the first 7 years. So opting out means you can contribute in whichever schedule or amount you prefer, subject to the limits and the deadlines. Hopefully that makes sense. Thanks for all the feedback on the audio, no pun intended. All right, next question is from Cindy. I would like to know if this service considered financial advice, or could the fees potentially be a tax write-off? We're not providing financial advice. We're not providing investment advice. We're a 401k plan document provider. Yes, these are deductible expenses because you're setting up a 401k plan for your business. So if you already have a basic plan at Fidelity, you can restate the plan, and there's still time to do it because restating the plan is really upgrading the documents. So if you sign up by December 31st, we will prepare those restated plan documents by December 31st, which means that you would be able to start claiming the credits, the $500 per year credits for 3 consecutive years when you file your 2025 tax return. And then again for 2 more years for a total of $1,500. Now, part of that restatement process will entail opening up new accounts for the restated plan, then rolling over the cash and assets from the pre-existing accounts to the new accounts. And now you will not only have a plan that has access to the tax credits, but also to advanced features like the mega backdoor Roth, the ability to take a 401k loan, the compliance support like the 5500 EZ and the 1099R that we handle and prepare, and we don't charge an additional fee for that. Now, all of that additional steps, the opening up the new accounts, the transferring of the cash and assets, that can happen in 2026. That doesn't need to happen by the end of the year. Great question from Cindy. Okay, next question. Can you explain the mega backdoor Roth? Absolutely. So that we'll explain it in a nutshell, and we have a lot of material on our website. We have a lot of videos, for example, on our YouTube channel. But in short, the mega backdoor Roth allows someone to contribute 10 times what you can contribute to a Roth IRA, but contribute to a Roth solo 401k or still have the funds end up in a Roth IRA. Essentially, you need to have a plan document. So again, we're a plan document provider that allows for the mega backdoor Roth. So a mega backdoor Roth contribution is really a two-step process. It's first a voluntary after-tax contribution, and you need to make that voluntary after-tax contribution so you can take advantage of the higher voluntary after-tax contribution limits. For example, the voluntary after-tax contribution limit is 100% of your self-employment compensation up to $70,000 for 2025. And then you also have to have a plan document that allows for the second step, which is the transfer of those voluntary after-tax funds over to a Roth solo 401k or a Roth IRA. So as mentioned, the funds could still end up in a Roth IRA, and you want to transfer it to the Roth account, so now you got the potential for tax-free growth. So if you sign up by the end of the year, you establish a plan by the end of the year, because we prepare the establishment documents within the same business day, you'll lock in the ability to make all types of contributions, whether employee, employer, or voluntary after tax, by your business tax return deadline, including any timely filed extension next year. You also lock in the ability to claim the tax credits. Yes, that deferral election form is the one that's used to opt out of the default 3% contribution percentage. So in order to be eligible to claim the credits, you need to have a plan document that has the automatic enrollment feature enabled. And part of that automatic enrollment feature will establish a default 3% contribution percentage. But the solo 401k owner, as the participant, has the right to opt out of the default, which will allow them to contribute in whichever schedule or amount they prefer, of course, subject to the limits and the deadlines. And the fact that they exercise their right to opt out of the default doesn't stop them from being able to claim the tax credit. You can still claim the tax credits, even if you exercise your right to opt out of the default. So yes, the question is whether if you make a mega backdoor Roth contribution to a voluntary after-tax solo 401k account at Fidelity, can those voluntary after-tax solo 401k funds be transferred to a Roth Vanguard? So the answer is yes, they can, but based on client feedback, most find that it's easier to first transfer to a Roth IRA at Fidelity and then have Vanguard and retrieve the funds via the ACAT system. So then they're transferred electronically from the Roth IRA at Fidelity to the Roth IRA at Vanguard. So virtually all of our clients want to opt out of the default because they want to have that flexibility. One of the hallmarks of a solo 401k plan is that you have tremendous flexibility in terms of being able to make pre-tax versus Roth, in terms of the timing of the contributions. So as long as the plan is established, meaning you sign up with us by the end of the year, all types of contributions, whether employee, employer, or after tax, can be contributed by the business tax return deadline, including any timely filed extension in 2026. So opting out of that default contribution percentage will allow the solo 401k owner to make contributions in whichever schedule or amount they prefer, subject to the limits and the deadlines, but still enable them to be able to claim those tax credits. Hopefully that makes sense. And if this is helpful to you, if this is making you feel more confident about your retirement future, please like this video. It's going to help us get the word out to other solopreneurs, your fellow solopreneurs, just like you, who might be trying to lock in their ability to claim tax credits who might be looking to lock in their ability to make contributions, all types of contributions for 2025 by the business tax return deadline, including any timely filed extension next year. So please like this video. Thank you so much. All right, I'm glad it was helpful, Cindy. There's no need to open up the Fidelity account. And to be honest, it's doubtful that Fidelity is going to process the application by the end of the year. I mean, they're inundated, but that's fine. There's no rush to open up the accounts because, again, all you're trying to do is establish the plan, meaning the documents. You can open up those holding accounts anytime next year in time to make the contributions by the business tax return deadline, including any timely filed extension next year. So it's a false deadline. You don't need to open up the accounts by the end of the year. Just sign up with us by December 31st. Because again, we do same day setup. So you still got time. Yes, thank you for bringing that up. There's a lot of confusion out there. A lot of CPAs are wrong. A lot of providers are flat wrong. And it's understandable because they are discussing the rules that apply to a full-time plan, like one from corporate America. So if you work at Microsoft or you work at Delta Airlines or you work at General Motors, etc., and you're participating in your 401k through your day job, yes, you have to make the employee contribution by the end of the year. But the rules are different for self-employed individuals. Why? Because self-employed individuals many times don't know how much they've made until after the end of the year. So it makes sense from a policy perspective. And we are the solo 401k experts. My business partner and I, we're the top gurus in the marketplace. There's no one that knows more about this than us. And we've got the chapter and verse that we can cite. What would we cite? We would cite IRS Publication 560. What is IRS Publication 560? IRS Publication 560 is the landmark guidance for self-employed retirement plans that apply to self-employed individuals like solo 401ks. If you look at page 3 of IRS Publication 560, there's a chart that makes crystal clear that as long as the plan is established by the end of the year, that'll preserve the ability to make all types of contributions, including employee contributions by your business tax return deadline, including any timely filed extension. So, and again, it makes sense from a policy perspective. So we are the plan provider. We're not advising clients on their investments. We're not holding the accounts. Now, we're still very hands-on in helping customers open up accounts. For example, we prepare the paperwork that's required. We're neutral as far as where the accounts are at. We don't force our customers to go with a specific financial institution or bank. And we're very hands-on, again, in helping customers. We've helped customers open up accounts at hundreds of different banks, different credit unions, different brokerages like Fidelity and Schwab, and we prepare the paperwork that's needed. So those financial institutions, they will be providing the account statements that will serve as the records of the plan. And that'll make it easy for you to keep track. You don't need, this is a great one from Justin. Again, a lot of confusion out there. Why? Because if you go with the vanilla solo 401k providers like Fidelity or Schwab, they force you to bring your own EIN. So if you're a sole proprietor, you may never have had a reason to get an EIN. You may not have an EIN. And the IRS system that issues the EINs is in the process of shutting down as we speak for the year, for end of year maintenance. But that's fine. You don't need to have an EIN in order to set up a solo 401k plan with my solo 401k financial, because what is a 401k plan? It's the documents, it's a legal entity, it's the trust. So we have IRS approved plan documents. We are an IRS approved plan document provider. We prepare the solo 401k plan documents within the same day when you sign up. And you don't need to have an EIN for your business to sign up with us. All you need to do is be eligible. What does it take to be eligible? You've got to be reporting earned self-employment income on your taxes with no non-owner, non-spouse employees working for any business owned by you or a spouse, if any. So we'll prepare the documents within the same business day. And then That'll lock in your ability to take your time to open up the accounts and make contributions by your business tax return deadline, including any timely filed extension in 2026. And at that time, we'll help you. We'll obtain the EIN number, not for your business, but the EIN number for the solo 401k. And that is the IRS expectation, is that an EIN number, a separate EIN number, is obtained for the solo 401k. So we'll obtain that, but that's part of the account opening process. So that can happen in 2026. So no worries, no problem. You can still sign up. You can still meet the deadline. You can still lock in the ability to make all types of contributions for 2025 by your business tax return deadline, including any time they filed extension in 2026. You'll lock in the ability to start claiming those tax credits, the $500 per year tax credits for 3 consecutive years for a total of $1,500. You'll be able to lock in the ability to start claiming those tax credits when you file your 2025 tax return. So those $1,500 in tax credits is a dollar for dollar reduction in your tax liability. This is not a tax deduction. This is a tax credit, which is going to more than cover our fees for the first 7 years. So it's tremendous. We were the first provider to offer a plan that was eligible for the tax credits. Okay, sorry for asking questions due to the audio issue. Yeah, thank you so much for your patience with the audio. So do I need to make sure to remember contributing 3% of the salary with every salary payment? No, you do not, Harry. No, you do not. Why? Because you opted out of the default, but you're still eligible to claim the credits. That's the beauty of it. We were the first provider to offer a plan that was eligible for the tax credits. We were the first provider to offer a plan that was eligible for the mega backdoor Roth. We are the leaders in the space. Now you see other providers jumping on board, finally, after 2 years, offering a plan that's eligible for the tax credits, which we're happy about because that gets the word out to other solopreneurs just like you to help make it easier to afford to be able to set up a plan. For example, these $1,500 in tax credits is going to more than cover our fees for the first 7 years. If you're not hearing the answers to the questions, please ask again and I'll repeat. I know we've got some audio issues. We appreciate your patience with the audio. We're not the record keeper because we're not the account provider. So we're neutral. So you, we are totally portable, meaning clients can have their accounts at the bank or brokerage choice, whether it's Fidelity, Schwab. So a lot of customers, they want to have their account at a place that they already have other accounts at. Let's say you've got IRAs at Fidelity. Well, now you can have your 401k account at Fidelity. So if you're used to getting an account statement from Fidelity, it's going to look the same as the one, or very similar, right? Obviously, it's going to refer to your 401k account, but it's going to look the same or very similar to what an account statement that you already have for your pre-existing accounts. That was in response to Robert's good question as far as asking for account record samples. Hopefully that makes sense. So you're going to use the deferral election form, which is one of the notices that needs to be provided as part of the auto enrollment feature. It's one of the notices that we automatically include as part of the onboarding package. So you'll use that deferral election form to opt out of the default 3% contribution percentage that needs to be set. Opting out is going to allow you to contribute in whichever schedule or amount you prefer, obviously subject to the limits of the deadlines, and still be eligible to claim those tax credits. So it's that deferral election form. Do employee and employer contributions need to be made as separate transactions, or can they be added together as a lump sum? So they can be deposited into the same account if they're both pre-tax. Yes, it's allowable to make those contributions in one lump sum. Now, it's going to be good to have separate internal records just to document that which portion was an employee, which portion was an employer. Some will transfer just to help document that. Some will transfer in separate transfers just to, again, help document that one was an employee, one was employer. But technically speaking, it doesn't have to be in separate. and both can be deposited into the same pre-tax account if they're both pre-tax employee and pre-tax employer. Well, if you're watching on StreamYard, yeah, there's no like button on StreamYard. Thank you, Robert. But if you can go on YouTube and you can subscribe, you can like the video on YouTube, you can get notifications, you can help us get the word out on YouTube. So please don't hesitate. Thank you so much, Robert. I see. Next question from Dirk. Thank you for bringing the question, Dirk. Ah, yes, we did miss it. Thank you so much. I know that I have until my tax filing deadline to fund my solo 401k, employer and employee, as well as voluntary after tax. Do I need to document my election by December 31st? So what some clients choose to do is just make a memo to the file. Now, that's a non-binding election. In other words, you could contribute more, you could contribute less, obviously subject to the limits and the deadlines. So what's key from a solo 401k perspective for a self-employed person is that you're establishing the plan by the end of the year, which you've already done, and that you make those contributions by your business tax return deadline, including any timely filed extension in 2026, that they're within the limits by the deadlines, that they're going into the applicable accounts, like the pre-tax versus the Roth, for example. Yes or no to Fidelity question on opening account. So yes, you can definitely have the accounts at Fidelity. Would you like to add successor plan administrator? It's up to you. You could do that just in the plan records. Remember, Fidelity is just the account provider. So really what the official plan documents are the plan documents that we provide. I mean, take, for example, the beneficiary election form. That is the beneficiary election form that we provide. That's the official beneficiary election form, not the one that you may be prompted to submit at Fidelity. Because remember, they're just the account provider. They're not the plan provider. I mean, you can if you want to, but it's not required. And the concern is that you might end up with inconsistent records. Got it. So you don't need to have an EIN. Thanks for repeating the question, Justin. You do not need to have an EIN for your business to sign up. You just need to be eligible, meaning you're reporting earned self-employment income on your taxes with no non-owner, non-spouse employees. Uh, an EIN number will be needed when it comes time to open up the account for the 401k, but we're talking about an EIN number for the 401k, not an EIN number for your business. And we obtained the EIN number for the 401k as part of our services. That's a fair question, most certainly, Bill. So again, we're not the investment provider. We're not the account provider. It's very common that customers will upgrade their existing plan from somewhere else to our plan. In other words, there's a robust process. So we are a growing business, thank God, right? We've been in business since 2009, been through multiple recessions, never had any type of layoffs or anything like that on our team. So our direction is just to continue to grow. There's no plans, of course, to shut down and nothing of that nature, but it's a fair question. But to put you at ease, if that were to happen, you would have a year and it would just be a matter of finding a new document provider. Again, you could keep your accounts where they are because we're not the account provider. There's no impact to your investments because we're not the investment provider. And there's a robust process to do that because we have had many customers who have upgraded their plan, whether their existing plan with provider went out of business or whether they just want to have a basic plan that they want to upgrade to our plan to take advantage of the service and features of our plan. So there's a robust process to do that. And you would have time to do it. Oh, thank you so much. We do appreciate your business. We look forward to working with you. Thank you so much. I'm a sole proprietor with an EIN and plan to form an S Corp next year with a new EIN. Should I wait to set up a solo 401k next year, or can I do this year and update later? You can do it this year and then update later. No problem. It would just be a document update when your self-employed business changes. It's not an uncommon occurrence that someone's business just graduates to maybe an S corp from a sole prop, and that's not an impact to their plan. Like, the name of the plan stays the same, the accounts stay the same, the investments stay the same. It's just a document update. So it's going to be very unlikely that you're going to be able to open up the accounts and make the contributions at this time, but there's no rush. There's no need to make the employee contributions because the rules are different for self-employed individuals. Unlike a corporate 401k plan where the employees have to make their 401k contributions by the end of the year, the rules are different for self-employed individuals, and this is clear based on IRS Publication 560, which is the landmark guidance for self-employed individuals. As long as the plan is established by the end of the year, meaning the documents, you'll lock in the ability to make all types of contributions, whether employee, employer, or voluntary after tax, by your business tax return deadline, including any timely filed extension next year. Absolutely, yes, it's a great thing. So, uh, thank you so much for that positive feedback. I opened a Roth 401k at Charles Schwab. Will that work, or should I open new accounts after I sign up with you? So Schwab does offer a Roth 401k, but keep in mind it's a very basic Roth 401k. Essentially, they're forced to offer the Roth 401k because starting in 2026, if you make over a certain amount, you may be required to make, if you make over a certain amount and your age is above 50, the catch-up contributions that, if you decide to make catch-up contributions, they'll have to be made as Roth contributions. Again, not for everybody that's over 50, only for a certain uh, class or category if you make above a certain amount. So that means that these basic 401k providers like Fidelity and Schwab are forced to offer the ability to accept those Roth catch-up contributions, but they're not allowing mega backdoor Roth. They're not allowing in-plan Roth conversions. They're not allowing employer Roth contributions. So it's a very vanilla Roth plan. So now you could upgrade your plan to our plan in 2026 and still be able to make the mega backdoor Roth contributions by your business tax return deadline. But if you want to be able to start claiming the tax credits on your 2025 tax return, you'll want to sign up with us by December 31st so we can restate the plan documents by December 31st. Then you can take your time in 2026 to open up the new accounts, because new accounts will need to be created for the restated plan. They can be opened at Schwab. So even though Schwab offers their basic plan, they still will open up accounts for people that bring their own super advanced plan, like the one offered by my solo 401k financial. So you could sign up with us by the end of the year. We'll restate the plan documents within the same business day. Then take your time to open up the new accounts for the restated plan, make the contributions. You'll still qualify to claim those $1,500 in tax credits starting with your 2025 tax return. In other words, $500 per year for 3 consecutive years. So that would be a reason to still restate by the end of the year. There's no fee to opt out, right? We automatically include the documents that are needed to be eligible to claim the credits, and it's through that deferral election form that we automatically provide. That's fine. There's no harm in doing that. Okay, that's great. I'm glad we answered the question. Thank you so much. Thank you so much, Robert. Thank you so much, Brian. Thanks to all. So again, if this is helpful to you, please like this video, whether you're on LinkedIn or YouTube or X or Instagram. It really helps us to get the word out to others who are just like you, who might be trying to catch up on their retirement savings. Okay, can you please email us at support@mysolo401k.net, and we can delete that from the database. Next question. When do we let payroll providers know when we actually make the contribution? No, you can go ahead and let them know now, to the extent that Gusto is going to be doing the W-2, and to the extent that you're making an employee contribution, because that is reported on the W-2. You can let the W-2 provider know now about the employee contribution that you will make. That doesn't mean you need to make the contribution now. You could still make the contribution by your business tax return deadline, including any timely filed extension. So for example, if your business is taxed as an S Corp, March 16th of 2026 or September 15th of 2026, if you file a timely extension. Oh yeah, you don't need to have a formal legal entity, Justin. You don't need to be an S Corp or a C Corp. You can be a sole proprietor without a formal legal entity. You don't need to have an EIN number for your business. You just need to report earned self-employment income with no non-owner, non-spouse, full-time W-2 employees working for any business owned by you or a spouse, if any. Great question, Justin. Thanks for bringing it. If I have a single member LLC, which is the employer in a state which is different from the one that I pay taxes on, which address should the 401k plan documents have? The business address or the address I pay taxes from? It doesn't matter. You can use either. Either is acceptable from a solo 401k perspective. Keep in mind a solo 401k is a federal retirement trust. Great question though, Nick. Thank you for bringing it. When we add employment info when applying the Fidelity account, the company name is the full-time company job or the self-employed business name. You want to use your self-employed business name. Now, Fidelity may have that because you might have had a former employer plan at Fidelity. So you can just simply update that information when you submit the application. Keep in mind, you first get the documents from us, from my solo 401k financial, then you can take your time to open up the accounts, whether it's at Fidelity or Schwab, by your business tax return deadline, including any timely filed extension. That's the deadline to open the accounts and make those contributions for 2025. Thanks for joining us on Instagram. Thanks for checking us out on LinkedIn. Thanks for checking us out on X. Please like the video if you're finding it to be helpful. Please subscribe so you get notifications of when we go live. We go live every day, bringing the knowledge, answering the questions. We're the leaders in the space, so we really appreciate the engagement. We really, really do. We know that everyone works hard to save to earn their self-employed income and to be able to secure their retirements. So we're here to help. Thank you so much. All right, new client here. I've opened 3 accounts with Fidelity. I'm an LLC taxed as a C Corp, running the first payroll today. I'm maxing out my 2025 pre-tax contribution. Will I be able to do the employer matching profit sharing contributions afterwards? So thank you so much for your business. We do appreciate it. Keep in mind, there's no requirement to make contributions through payroll. The only requirement is that you establish the plan by the end of the year, meaning you sign up, because we establish the plan documents within the same business day when you sign up. Now, if you're going to make an employee contribution, you want to let the W-2 provider know about that employee contribution so they can report it on the W-2. Then you can park the money. You can transfer all types of contributions, whether employee or employer, voluntary after tax, from your personal account, from your business account. It doesn't have to go through payroll. Yes, you could still make employer contributions. You can make all types of contributions by your business tax return deadline. So that'd be April 15th or October 15th of next year if you file a timely extension for your C corporation tax return. Now, keep in mind, matching contributions don't apply to a solo 401k. Instead, you can make employer profit sharing contributions. Now, you'll be able to make that employer contributions assuming that you've got the self-employment income to justify it. So the employer contribution limit is 25% of your W-2 wages, specifically box 1 of the W-2 plus any pre-tax elected deferrals, not in box 1, but over in box 12. So assuming that you didn't contribute all your wages, say as an employee contribution, you got additional capacity, then yes, you could still make an employer contribution and you got the time to do it. So yes, I mean, you could certainly proceed with opening up the accounts. They may be opened up in January, but let's say it's the first week in January, you can make those contributions. You can roll over funds from another retirement account as long as it's eligible to be rolled over. Let's say it's a former employer plan or a non-Roth IRA, and we're very hands-on. in helping you roll over those funds. We've helped thousands and thousands of customers roll over money from hundreds and hundreds of different places. As you might imagine, the process varies, whether you're trying to roll over an IRA from Vanguard or a former employer plan from, say, John Hancock. We've tracked all that experience with all those thousands and thousands of customers in our knowledge base so we can make it easy for you. So yes, you could certainly roll over the money, open up the accounts, make the contributions right away, and so you can start investing. We answered your question. That's great. Thank you so much. Does the Fidelity account allow the mega backdoor Roth IRA contributions? Most definitely. Let's level set. Remember, you're getting the documents from us, not from Fidelity. What does that mean? That means you got the best documents out there. You got the most powerful documents out there. You could make the mega backdoor Roth contribution, regardless of whether the accounts are Fidelity. Because all Fidelity's doing is they're providing the accounts. What you can do is based on the documents. Who's providing the documents? We're providing the documents. Do our documents allow for the mega backdoor Roth? Most definitely. We were the first provider to offer plan documents that allow for the mega backdoor Roth. That means it's one of the top reasons that clients open up the accounts. We've got customers that have been making mega backdoor Roth contributions all the way back from 2013 when we first started offering it. What does that mean? That means they've got over $1 million in their Roth account with that potential for tax-free growth. Because as long as they take that qualified distribution, once they've had the account for 5 years, which obviously they would have, and they're over 59 and a half years of age, they can take it out totally tax-free. So that's the beauty of it. Yeah, thank you so much for your patience with the microphone. We're trying to field this in one of the busiest times of year, and unfortunately, on the road, so the microphone's a little bit janky. But we do appreciate it. We wanted to still be here for you, even though it's the 29th of December, even though it's one of the busiest days of the year. I'm happy to repeat the answers. I'm happy to stay on and keep repeating it. So please continue to chat over questions if you didn't hear everything, and I'll keep repeating it. Thank you so much. We appreciate it, Andy. I think you just answered this question, but want to confirm. I'm considering the mega backdoor Roth. I'm an existing customer. Do I need to do anything by December 31st? No, you don't. You've already got a plan document that allows for the mega backdoor Roth. When do you have to make those mega backdoor Roth contributions? You got to make them by your business tax return deadline, including any timely filed extension next year. So that means you got plenty of time. So enjoy the holidays. Enjoy New Year's Eve. Sit back, circle back next year in January or February, whenever you've determined and you're ready that you want to make that mega backdoor Roth contribution. Thank you so much, Dirk. We appreciate your business. We know you work hard for your money. We're here to help you. I completed an account and paid $650 on December 26th. So let me flag your email, Susan. I'm sure that we've sent it out to you, but we'll re-forward it to you. Rest easy though, Susan. Why? Because we've created your plan in our plan document. We are the official plan in our database. We're the official plan document provider. So that means you've already met the deadline. You don't need to return the completed and signed pages back to us. But I appreciate your question, and we're most definitely going to track down that email and resend it to you, Susan. Thank you so much. I have the same questions. What happens after you fill out the account information and pay the $650? So we're going to track your email down as well, James, and forward it to you. But what happens is we create the plan documents within the same business day. We are the official IRS 401k plan document provider. So it's in our system of record. You've met the deadline. You don't have to return the completed and signed pages back to us by the end of the year. But we flagged both of those. We made mental notes here, made written notes, track that down, forward those emails to both of you. But yes, if you sign up, we prepare the documents within the same business day so you can meet the deadline. We're here to help. Another question from Justin. I'm a realtor. Does 1099 real estate commission income qualify? Yes, it does. If you're a 1099 independent contractor and you're reporting the income on Schedule C, which is where independent contractors report it, and you don't have any non-owner, non-spouse, full-time W-2 employees working for any business owned by you or a spouse, if any, Justin, you're going to be eligible. So rest easy. Thank you so much. We appreciate the opportunity to work with you, Justin. Thank you. I just ordered the Solo 401k plan and hope to get the files today to open the Fidelity 401k account. Can I also open a Fidelity cash management account to manage the cash? No, Fidelity won't open a cash management account for a 401k, but you can have a separate bank account. You can invest in money on a money market account via the type of accounts that Fidelity opens. So we are processing the documents within the same business day. So you most certainly meet the deadline, and then there's no rush to open up the accounts. There's no rush to make the contributions. Keep in mind, Fidelity is inundated. So it may not be possible for them to still process account applications by the end of the year, but no worries, because remember, you're getting the documents from us, and then you're taking your time to open up the accounts at the bank or brokerage of choice. And there's no rush to open up those accounts by the end of the year. All you got to do is sign up by the end of the year. Exactly. You've opted out, Harry. You've locked in your ability to make contributions in whichever schedule or amount you prefer, subject to the limits and the deadlines. So you are the administrator through your self-employed business, whether that's a sole proprietor or your LLC or your S corporation, etc. We are not the administrator. We don't have that level of access and control. We're the IRS approved plan document provider, but we still are very hands-on in helping you open up holding accounts at the bank or brokerage of choice. We're still very hands-on in helping you in doing the 5500 EZ. We do that for no additional charge. We do the 1099R for no additional charge if that's needed, if the 5500 EZ is needed. 5500 EZ, keep in mind, that is only needed once the value of the plan exceeds $250,000. But we need to be notified once the value exceeds $250,000 because we don't have access to your accounts. But just notify us. We'll add you to the plan list, our queue that for plans that need the 5500 EZ. Then we'll take you through that 5500 EZ filing process where we file it on your behalf. We do that for no additional charge. And we do that through the electronic filing system to make it easy for you. So you can rest easy because the late filing fees are tremendous, up to $250 per day. Yes, we made note of you. Susan Carroll, we made a note of you. James Cogman, thank you so much for bringing your questions to the daily webinar. Thank you so much for signing up with us. Keep in mind, if you signed up and made payment, then your plan has been established in our system of record and you've met the deadline. We are the IRS approved plan document provider. Yes, there's no seasoning requirement. You can transfer those voluntary after-tax solo 401k funds to a Roth solo 401k within the same day. Now you want to go to our website and let us know about that transfer so we can capture the information. You can go to mysolo401k.net/forms, find the applicable form to submit to give us the information we need so we can add your plan to the queue to prepare the 1099R. And then we do that for no additional charge. Okay, we're going to flag your account as well. Rebecca, thank you so much, Rebecca. You opt out via the deferral election form that was included as part of the establishment document packet that's sent within the same business day when you sign up. Actually, it's sent within hours. We're processing these very quickly. Fidelity's flat wrong. They are flat wrong. Why? They're talking about the deadline that applies to employer plans. Keep in mind, Fidelity is the largest provider of 401k plans, big company plans. So of course, they're speaking from that perspective. So it's understandable, but they're just straight flat wrong. And we got IRS publication 560 to hang our hat on. We've got experience working since 2009 as a company with thousands and thousands of customers, and we've got logic and reason to hang our hat on. Why? Because it makes no sense that the deadline would be the end of the year for a self-employed person, because many self-employed individuals are still working all the way through the end of the year, so they don't know exactly how much they've made, and your ability to contribute is based on how much you've made. So that's why it makes sense that the rules give you time to determine how much you can contribute, then determine how much you want to contribute. As long as you make all of those contributions by your business tax return deadline, including any timely filed extension. If you go back to the initial email that you would have been sent, look at the establishment document email that was sent out when you first signed up that same business day, and the download link, you'll still be able to review all the files that were created. And one of those is going to be the deferral election form. You want to notify us once it's reached over $250,000, including the value of all accounts, all investments, even the value of any defined benefit plan that might be sponsored by the self-employed business as of December 31st. Then you need to file the 5500 EZ. At that point, let us know so we can add you to the queue. All right, it looks like that's taken us to the end of the questions, which we are coming to the end of our session for today. We really appreciate your participation. Again, if this video is helping you, if this webinar is helping you feel more confident about your future, please like this video. Helps us to get the word out to other solopreneurs just like you. Please subscribe. We also invite you to our community, mysolo401k.net/my community. We have the largest community of solo 401k owners, solopreneurs, advisors around these topics. We've got over 30,000 members growing every single day. What does that mean? That means we've got vibrant forums. We have community forums. All are welcome. It's free to join. You don't have to be a client to join. You don't have to be an advisor to join. All are welcome. It's free to join. You can join within minutes. Super easy to join. It doesn't hurt to open the Fidelity account, but there's no rush to do it. If you roll your money out of the plan to a Roth IRA and the value is never $250,000 or more by the end of the year, there's never going to be a 5500 EZ filing requirement then. Well, this is a fantastic session, everyone. Thank you so much. We appreciate it. We'll give it one more minute to see if any additional questions trickle in. In the meantime, we'll flag those customers that I said we would get back on. I'll start to flag those now so we can get back to you. This is a fantastic session. We really appreciate it. Thanks for those that are still watching on Instagram. Thanks for those that are watching on LinkedIn. Thanks for those that are watching on YouTube, X, StreamYard. Thanks to all the customers. We really appreciate your business. Yes, if you go to our website, mysolo401k.net/book, feel free to grab a time. Of course, the calendar is totally booked out for the end of the year, but feel free to grab a time. Yes, we've got it, Carol. We're following up with you. Thank you so much. I'm not sure if I know the audio was cutting out. Yes, defined benefit plan that is sponsored by the self-employed business, the value of that defined benefit plan has to be added together with the value of the solo 401k. And if the total value exceeds $250,000, separate 5500 EZs have to be filed for each, including the solo 401k. All right, until next time, everybody. We have no plans to offer DB plans right now. We can refer you to someone, though. Feel free to email us at business@mysolo401k.net and put defined benefit plan referral in the subject line, please. All right, wonderful. Thank you so much, everyone. Take care.